My name is Jonathan Rose. I'm excited to be here. So thanks so much for hanging out. Great day of presenters. I'm going to talk about my flagship program today, guys. It's called Swinging for the Fences. And the Swinging for the Fences options program, it's exactly how I learned how to trade options and exactly how I teach options. You've probably heard a ton of risk disclaimers today, so we're probably good on that. So that's me back in the day when I was on the floor of the Chicago Mercantile Exchange with the arrow going out of my head. Now, my big promise to you today is I've taught hundreds how to trade options this exact same way. The comments I get is, I didn't know you could do that, or wow, why doesn't anybody else teach this? It's the foundation of exactly how I trade and exactly how I teach options. So today, I'm going to show you how to find and buy low-priced options, putting ourselves in position for awesome returns without the need to stare at the market all day. So if you have a regular job and you're not able to stare at the market all day, this is perfect. If you are trading throughout the day, this works as well. So let me stop here. Let me ask everybody, just so I have an idea as I go through the training, how comfortable are you with options? Let's do a scale of 1 to 5. 1 being, I don't really know what a call or put is, I don't know what options are, and 5 being, I could be a market maker, I just choose not to. So 1, I have no clue. 2, I get it a little bit. 3, I trade them. 4, I'm very, very comfortable. And 5, I can value options like an expert. I'm extremely confident. And this will really help me because I'm going to introduce myself. I'm going to give you a little bit of background. And then I'm just going to go into training because, hey, there's so many people that you can learn from. I just want to show you exactly how I teach and see if it resonates with you. All right, cool. Thank you, everybody, for getting back. So far, I think about 20% of the people have responded. We have 1, mostly 3s, great. A couple of 5s. Overall, though, I'd say average of about 3. My 5s, I'm going to ask some questions as we go along. 5s, you should be answering these questions as well, okay? So a little background, that's what I'd want to know if I was sitting in your shoes. I've done nothing but trade throughout my entire career. I've traded for 18 years. I started in the business trading NASDAQ futures. Then I traded bond futures for 7 years or 8 years between 2003 and 2010. 2011, I was a market maker on the floor of the Chicago Board Options Exchange. That's really where I learned how to value options well. And again, I go over this for your comfort, not to boast at all. I just want to share my background so you can see I'm an expert in this area. Okay, I'm not a marketing guru. I trade for a living and work with a select group of retail clients. So what's edge in trading? Edge is what sets you apart. That's it. Edge is what makes you different. So every trade you make, you just need to think why. What's the reason for being in that trade? What are you doing in the market that gives you special edge? And what I want to show you today is I'm going to walk you through some options training, but then I'm going to show you how I approach the market, but I'm also going to explain why I have edge in this given trade. So let's start. Buying options. That's what we're going to be talking about, buying options. If we buy a call or a put, it doesn't matter for 30 cents, and we buy 10 of them, we have $300 of risk. We can never lose more. We can make an unlimited amount if it keeps going in our way, but the great thing about buying options, especially options priced less than 50 cents, it's just a little bit of risk, right? You could buy 10 for $300, or you can buy 1 for $30, and you never lose more no matter what happens in the overall market. I like to buy options. When you buy options, you're long movement. You want craziness. When you sell options, it's the opposite. You want things to calm down. I think of it, when I'm buying options, I risk $1 to try to make 5. When you sell options, you can think of it like you're risking 5 to try to make $1. When you sell options, you're going to make money more often than not. But when you lose, you got to be very, very careful. You could lose a whole bunch of money. So my goal for this, guys, is just for you to understand how there's more to trading than just technical analysis. But I also want you to understand that others have committed to this process and are no longer searching for the best approach to trade options. So with that being said, think about the benefits to buying little options, especially on a day like today, where the Dow is down 200 points and volatility is up close, or the VIX close to 15. If you're buying little options, you have these little puts to protect yourself on days like today. I like to do these little trades because you can get massive returns. Like an idea we had in YRCW. YRCW is from a little bit of time ago, but when YRCW back here had their earnings, they dropped 50%. I was on a conference call. There wasn't any accounting problems. It was just a really bad quarter. So that's when I sent this trade alert out to my members. Hey guys, YRCW got hit. 10 calls, 9 calls. If we could buy those for a cheap price, good risk reward. Mark ended up buying 100 of the 10 strike calls for 9 cents, $900 invested. He ended up making 2,200% or over $20,000 once YRCW started rallying. Thomas here makes 800% on the exact same trade. Mark again, 2,200%, and Kelly 600% over here. Now it looked like everyone's trading options or been exposed to options, which is good because options are stock. Stock are options. It's the same thing, right? Options are a derivative of stock. And when I teach options, I want you to think of your options position like it is stock. And I put this chart up so you can see there's exponential growth going on in the options market. We need to be exposed to it. So let's get into some training. This, to me, is options 101. You need to understand how to manage your options position if you're going to risk your hard-earned money, right? So let's go through the example together. And again, you fives out there, you should be answering these questions. You should know this. ABC stock, phony baloney stock. It's trading at $10, okay? It's trading at $10. At that time, let's buy the 12 strike calls for 40 cents. Let's do it 10 times. So we're going to risk $400. The stock's at 10. We bought the 12 strike calls. Now, when you buy the 12 strike calls, I want you to look at the position like you're long 1,000 shares from 12. Why would we buy 1,000 shares at 12 when it's trading at 10? Because we get awesome leverage to do that. As the market rallies, it goes from 10 to 11, 12, 13, 14. Stock gets up to 14. Let's say there's 10 days to go until expiration. I want to take off 100% of my risk. I want to lock in money. We're long the 12 strike calls for 40 cents. I want to lock it in when it's trading 14. Here's my question. What can I do to take off 100% of my risk? What can I do to lock in profit with the stock trading at 14? There's 3 different things we can do. What can we do? Stocks trading at 14, we're long the 12 strike calls 10 times. We want to take them all off. What can we do? We can sell to close, right? We can just sell our calls. That's one thing. There's no break even, there's no stops. You don't want to use stops with options. We could sell the calls, we could just get out. What else can we do? Come on. What else can we do if we want to lock in profit? You guys are trading options, right? You have risk. I want you to get out of your position. What can you do? You have to protect yourself. There you go, Tom. You could sell calls, right? You could sell your calls. What about selling stock? I'm going to sell 1,000 shares. What do you think about that? Is that a good play to manage your options? I'd want to sell stock every single time. You don't want to sell your options, guys. And the reason you don't want to sell your options is because you're giving up your optionality. Your optionality is what you have when you're long options. So if you're long the 12 strike calls and you get out of them, great. You make $2 on the trade. You just made $2 grand. Good for you. But watch what happens when I sell 1,000 shares. When I sell 1,000 shares, I make $2, 14 minus 12, less the 40 cents. But let's say over the next 10 days, ABC stock comes out with accounting problems and the stock crashes down to 5. Look what I can do that you can't do because you sold your options. I can buy my stock back. I can buy my stock back. My 12 strike calls are worthless. This is options 101. This is what I want to teach you. This is what I want you to learn, okay? So be careful. Everyone out there with 4s and 5s, you need to know this to really, really manage your options position. Talking with my clients, this is something that I hear often. Can anybody else relate to this? Maybe buying another indicator or buying another system that promises riches, but you don't really learn anything. There's nobody around to help you. There's nothing else to learn. That's why throughout this presentation, guys, I want to show you proof with clients that have had success, but I also want to educate you because learning little things like managing your options with stock can have drastic effect on all your long-term option trades going forward. Here's an example of how I see the market. Sarepta Pharmaceutical, SRPT. When I traded this on the floor, we called it Serpent. We always had silly names for these guys. SRPT is a stock I follow very closely. I know that they're having their PDUFA date coming up, and I got an alert that one of the, I guess the nemesis of Sarepta leaves the FDA 3 days before the FDA decides on the approval of Serpent's drug or not. When I saw this article, September 14th, the next day I sent out a video to my members. I want to buy upside calls. It's really expensive, but if they get approved, it's going to trade over 50, maybe 60. Big risk, big reward. Whatever you bet, it's a binary outcome. Either it works or it doesn't work. A couple of days later, this one worked, but the tell was that guy leaving the FDA. Not real surprising. The nemesis leaves the FDA, stock shoots higher. Stacy tripled his money very quickly. Mark's long 3,500 shares for 28, stock trading over 60. That's over $100,000. And Taurus here calls me his ambassador Quan of his trading world. I had to look that up as well, but it turned out it was nice. Have some of you guys learned never to buy options? I always get this, that I don't buy options, I only sell options. I always think that if people teach you never to do something that half the market does, it's probably pretty good edge in learning how to do that. The difference between buying and selling options. Very general, but generally you can use this. When you buy options, you're going to lose 60 to 90% of the time. 10 to 30% you're going to be winners, but you need to make sure when you win, you're winning enough to cover your losers. Whenever you buy an option, a call or a put, a straddle or strangle, a debit spread, your long volatility, your long movement. The opposite is selling. Remember selling, we're risking 5 to make $1. we're going to win more often than not when we do that trade. But when you lose, you got to make sure that you don't really get killed. Like a day like today when the VIX shoots up to 15 from 11 or 12, short options are going to really have a difficult problem, but they have unlimited losses. What about this? Can anybody tell me what this is? Five different inputs here. Can anybody tell me what this is? And that's why I'm going through this, guys, because again, indicators, tricks, you need to understand the underlying foundation of the market. It's the only way. It's the same thing like I'm going to go work for you for 6 months or 12 months or 18 months. There's no tricks, right? Jonathan, it's going to take you 6 months to get up to speed and help me out at all, but sure, go ahead. I think the same thing. It takes time. In front of you is the Black-Scholes options inputs. In order to value options, there's only 5 inputs to figure out Black-Scholes. That's it. The 5 are in front of you. If we're trading Apple options, we know the stock price, right? It's given. We know the strike price. We know how much time. We even know the risk-free interest rate. Use a 1-year, use a 2-year. The only thing that we don't know when we're valuing options, the only subjective component, the only darn thing we're trying to figure out is volatility. I put this up because if you're trading options without using volatility, you're trying to get lucky. Volatility is the only subjective thing that we need to figure out. So I want to put up a slide here which shows the difference in how volatility prices a stock or an option. On the left here, low vol, 30%, okay? On the right, high vol, 70%. Low vol stock is Microsoft. High vol stock, let's say, is a solar stock or a gold mine or something like that. 30 days to expiration. The low vol stock, it just trades in a tight range. It doesn't really do anything. Sure, we can buy the 22 calls for a dime. If we got 10 of them, it'd be $100. It would cost us $100 to get long 1,000 shares at 22. Cheap. The reason it's so cheap is because that stock doesn't move very much. This stock over here on the right is crazy. If we wanted to get long 1,000 shares at 22 and buy 10 calls, that's $800. Sorry about that. Versus $100 on the left. Big, big difference in pricing, right? It's just volatility. That's the only difference between these two names. 24 calls, I made 30 cents. If we go $2 lower, 18 strike or $1, $4 lower, 16.70 cents. Can anybody tell me why I made the downside more expensive than the upside? Did I just do that to be silly? Did I make a mistake? Why is that downside more expensive than the upside? Is that something that happens often in the options market? Skew, or nice. I skewed the market to the downside. SKEW. Most options market are skewed to the downside. Rick, it's not because it's in a bull market. Here's the reason. I was a market maker. As a market maker, you have to anticipate what orders are going to come into a given stock. If you think about the most popular orders that are going to go into an options chain, it's going to be covered calls, buying stock and selling upside options. As a market maker, I know the public wants to sell upside options because they want to do covered calls. They want to trade options for income. So as an options market maker, I'm going to make the upside calls very, very inexpensive because I want that edge. I also know the public wants to buy puts for protection. So I'm going to make that downside very expensive because I want that edge. And that's why markets are skewed like they are. Biotechs is the only market that's skewed to the upside more often than not. The reason that is because people, the public, retail, wants to speculate on the next great drug. SRPT here, if I go 55, if I go $25 higher, $1.70 mid-market, $25 lower, $1 mid-market, upside skew. So the swinging for the fences strategy, it's my approach to options. It's my flagship approach to options. We need two things. We need movement and we need tradable options. And tradable options is 15 cents at 20 cents. We can't have a market that's 15 cents at $1. We can't do anything with that. That's what we need. This is why I have edge in this trade. Again, let's use Apple. There's over 100 analysts that follow Apple. There's over 70 market makers that price Apple options. There's no edge for you or me trading Apple. Because of the liquidity, because of all the analysts, by definition, Apple is one of the most perfectly valued stocks in the world. I want to look for stocks that are off the beaten path. Stocks that still have good liquidity and tradable options, but maybe they only have 2 analysts covering them and only a few market makers. That's where I have edge because I know how to price options. This was pretty amazing, and I want to share this just because I'm really proud of it. Jim Cramer reached out to a friend of mine who we both know. My friend sent him some of my content, and out of nowhere, Jim said, "This guy's great. Wow, this guy's amazing. We're reviewing your guy. I think he's a star." And then Jim Cramer says, "Tell him I want to be on his podcast." I didn't have a podcast, but I was pretty flattered that he said that. So of course, I created a podcast, had Jim Cramer on, flew out to Philadelphia and got to meet him. So that was very, very cool. Just out of nowhere sent me that. So something I'm very proud of. Before I get into the offer, I want to tell you about a trade that I think every retail trader should use, and it's lockups. Let me explain. Laureate Education. Laureate had its IPO February 8th, 2017. When companies IPO, they restrict stock. They don't allow some of the stock to be sold because they don't want the market to go down after its IPO. So when LAUR went public, they went public with 35 million shares. 6 months later, 133 million shares that were previously restricted are now able to be sold. The average daily volume in LAUR is only 300,000. Shared a trade idea. Let's buy the 17.5 puts with 33 days to expiration. Let me explain the trade. And think of it like you're an employee for LAUR and you were just bonused $100,000 worth of stock, but you can't sell it for 6 months. Fine. I'm excited. I'm a teacher. I don't know much about the market, but I have $100,000 worth of LAUR stock. Stock goes public at 12. It rallies up to 14 or 15. My 100,000 is worth 110. I'm excited. I wish I could take it off, but I can't. Sells back off. I'm sad. Rallies. Wow. I want to take it off, but I can't. Here's where I shared the trade idea. Here's where the lockup was. And here's what happened at expiration. There's an avalanche of supply coming to the market, and there's not the demand. That's why these trades work out so well. Every trade that we make, we want to have a reason for doing that trade. Judge here, great success with Snap and LAUR. John, sorry about that. John, top right, long 5 puts, and then stays here out of LAUR. Nice trade. So I want to stop here. Do you see the potential in learning how to do this properly? Technicals are fine, but it should be one feather in your cap. What this is, it's the foundation to trade options forever, okay? And if you've been out there, you've been trading for a while, 2 years, 5 years, 10 years, and maybe you're not getting the results that you think you should, you need to stop and reevaluate what you're doing. Change is hard, I get that. But what takes the lion's share of change is deciding to change. Once you commit to change, that could happen really fast. What really takes time is deciding to change. So hear me out. I think you'll see there's no BS, no games, just real information and someone who's always by your side. So again, the swinging for the fences covers everything you need to find, trade, and manage these positions. We want to find options priced less than 50 cents. The truth that I found about trading, if you haven't found your way yet, it's not your fault. It's not your fault if you're willing to learn, but you spend time learning the wrong thing. Trading is also not that complicated. When I hire traders, I'm not concerned whether they can learn the material. My concern is whether they have the temperament. Are they stubborn? Can they admit fault? Are they coachable? Okay, imagine you're the next testimonial that needs $8,500 or $1,300 to have doubled their account. So here's how swing works. Swinging for the Fences, again, is my flagship program, and everyone who's part of it gets a live options class once per month forever. After 12 months, you'll have 12 classes and 12 hours of recording. After 2 years, you're going to have 24 live classes and 24 hours of recording. When I first came out with Swing, I did it with one class. I believe I could teach you options as well as anyone, but I also, in talking with my membership, they felt like they were alone, so I wanted to put together a program so you know there's always someone by your side. So again, you get a live class every single month forever. Who is it for? Beginners. You're just learning options. Options are too big to ignore. The great thing about this is every single month you're going to continue your education. If you're new to options, same thing. It's real options knowledge. My experienced option traders, the 4s and the 5s out there, I was asking some pretty straightforward questions. And a lot of people didn't realize that you can manage your options with underlying stock. That's really the biggest improvement that I see. What that's called, it's called scalping gamma. The reason you scalp gamma is when you're long options, what happens to your options, right? They decay. Theta comes out of your options. What's the opposite of theta? The direct opposite of theta is gamma. They're opposites. When you're long options, you scalp gamma, you trade gamma to finance your theta. Once I get clients to understand that, that's when I see the biggest improvement in their own trading. So here's what else it includes. Swinging for the Fences, 2-hour on-demand workshop. It's yours to start watching that immediately. The benefits to buying inexpensive options? You know your risk, no surprises. Set it, forget it, straightforward. Again, the Dow's down 10%, your long puts, you're going to be protected. And this really does give you the foundation to trade options forever. Here's Paul. Paul sent me an awesome video. For one, his account's almost doubled, but the better thing was he's playing golf during the day. He's having lunch with his wife. He's not death staring at the computer all day. He does the research, he finds trade ideas, puts those in the market, and then the market's going to do what the market's going to do. If I put it all together, guys, you get live class once per month forever, and you get the 2-hour Swinging for the Fences masterclass. It's a fresh perspective. These are the comments I usually get. Thank you for teaching me how to scalp gamma. It's amazing how you manage your position Why don't others teach this? I don't know. It's options 101. You need to learn how to manage your options by using stock. More bonuses. Everyone likes the position management stuff after these presentations. So I'm going to throw in an hour workshop all about position management. I walk you through the 3 different ways of managing your options position. So now you get 3 hours right away, live classes forever. And your timing is awesome because the live class for January is tomorrow. I sent out a survey, got 32 people who responded who own swing. What's your favorite aspect of swing? Gamma scalping, a lifetime, feeling confident, big money potential, access, continued monthly classes. Okay, as you can see, you go through these 100%, 32 for 32, very, very, very positive. My objective is for you to learn to do this on your own. You should not be dependent on anyone. Lastly, I love working with clients. I receive some unbelievably sweet emails, but the ones that make me the most uncomfortable is when someone says, "You're so smart," or something to that nature. I'm not so smart. I'm not the smartest person in this room. I can guarantee that. I just have a skill set about a very specific thing because I've traded for a living throughout my entire life. That's the only thing that I've done. I started active day trader at the end of 2015 because I noticed a void in the market for what I consider to be real education. That's it. Keeping things nice and simple. The entire offer with the live class tomorrow. Okay. I always like to say, now you have a choice, guys. Don't change. Keep doing the same thing. Maybe use a few pointers that you picked up, or commit to really doing things different. So what I want to do, for the price that I show you on the next page, this is good for a limited time. It's one-time payment. It's not a membership. It's one time. You get live classes forever. I also want to throw in one more thing. Everyone likes the lockup trade. The lockup's really, really a cool trade. I'm going to throw in another hour workshop for you to really learn about lockups. Okay? So if I throw that in, you get 4 hours. Start watching it immediately. Live classes. We got class tomorrow. For anybody who wants to move forward, it's a one-time payment. Think of what you value this at, and I'm guessing it's less. Not $497, a one-time payment of $297, activedaytrader.com/swing. If we break down those classes, you can see the longer you go, they get pretty cheap pretty quickly. Okay? I want to be able to answer any questions. I think I still have like 5 minutes. I also want to show you that, if I can find my mouse, we had a lockup trade today, which is pretty cool. Do this. We had a lockup trade in VNTR. These are my coaching students. Locked in profit on VNTR. I believe there's more room, but I was up 110. Now I'm up 60. Nice work. Just scaled out of 2/3. We were buying these for 50 cents. Dennis, scalping the 20 puts, even better. So VNTR is our lockup trade. VNTR has got its lockup expiration today. So you can see members doubled their money on that trade. Okay. So again, it's activedaytrader.com/swing. We have live class tomorrow. It's at 1 Eastern. If you can make it, or if you can't make it, I'm going to send out the recording to everybody, as you'll always get, and then you guys get the 4 hours of content right away. The training that we went through, those 15 minutes or so, that's going to be very similar to the stuff that you'll learn in the Swinging for the Fences class, and then we'll go over the workshop and answer any questions that you have. Okay? Does anybody have any specific questions about the Swinging for the Fences program? Hey, so Sam is asking, is there a methodology to scan for their setups? Yeah, so I use a free scanner, so nobody has to buy a scanner. I use FinViz, F-I-N-V-I-Z, to scan, and I show you the scan in the workshop. And it's the same scan we use all the time, and we use a couple of different methods to find these different trades. But most important, we learn how to find them. I want you to learn how to manage them. Learn how to manage a portfolio. By far, it's the most important thing in all of trading. So to go over exactly what you get again, activedaytrader.com/swing. You get this masterclass teaches you the scan and everything about swinging for the fences. You also get 3 ways to manage your options position, a lockup bonus, and then a live class once per month forever. One-time payment, $297, activedaytrader.com/swing. Yeah, so even guys, small accounts, big accounts, everybody should look to buy little options, right? If you can buy an option for 20 cents, you can buy a 1 lot for $20 and never have any more risk. You can buy a 10 lot for $200. And even people with smaller accounts might say, why do I need to learn how to scalp gamma? Why do I need to manage my options position with stock if I have a small account? Because you want to learn what's available to you. Learn everything you can, and then if you have a smaller account, fine. Just recognize that that puts you at a little bit of a disadvantage. Same thing if you're trading in an IRA. You're trading an IRA, you still have to learn everything, but then you just have to learn to trade within the limitations of your IRA or whatever vehicle you're trading out of. The great thing about trading like this too is by understanding your risk in every trade, you decide how much risk you're comfortable with before you enter the market. So you're never in a position where you have that unlimited risk, where you have that tail risk. That's what gets people into trouble. When I hear about people blowing up their account, it's because of these credit spreads that they're all in, because they're selling options for 20 cents while risking $5 on these things, because if you trade long enough, you're going to see everything happen. You're going to see wild, wild, crazy moves happen. So that's why learn how to manage your position, learn how to manage your portfolio. It's all one. You trade an account. Don't think you're an S&P futures trader. Don't think that you're a short options trader in the SPX. We're just looking for return on capital. That's it. Keep it simple. Grow your account, but do so, educate yourself. That's going to be the most important thing. Okay? See a bunch of people move forward. I look forward to working with you guys. Again, if anybody wants to jump on this and get the lockups, we have live class tomorrow. Also, there's a 30-day, no questions asked, money back guarantee. Kind of a no-brainer there. Get a live class, see if it works for you. If not, move on, no problem, no questions asked, 30-day return policy, okay? So thanks a lot, Traders Talk Live, for having me. This was great. I appreciate everybody participating. That made it a lot of fun. Excited to work with some new clients. Thank you, guys.